Okay, hello and good morning, all you traders out there. Hi. How are you? Today's the 11th of July, 2023, guys. So, yep, welcome everyone. Welcome to Easy Markets Daily Pitch International. As always, in these sessions, we're going to have a look at the markets, a few of the charts, the technical setups, see how we can position ourselves maybe, or or maybe not. Actually, maybe we could wait it out. But yeah, before we go further, as always, we need to have a quick read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner in there, and I'll be back in a bit. Okay, so now then, also just before we jump in further, just a quick update, or just a quick actually mentioning of our Easy Markets website, which you can always check out for more information about it, guys. So check us out. We do have different options for you, different solutions, and different tools that can help you. But yeah, if you have any questions, always you can reach out to us. So now then, let's jump into the charts. The first one I want to pick up here is Nikkei 225, as always. So we're seeing a bit of a retracement back to the upside. Now, again, yesterday, as you know, as I spoke to you yesterday about this, that yesterday we had some speakers, some Fed officials, who were talking about the same thing again. Like, yes, they're seeing more rate hikes in the near future, but later on there won't be any rate hikes. So, and in general, everybody's discussing this idea, as I said to you before, that are the rate hikes needed in general already. So, but yeah, I'll get to that in a bit, but looking at Nikkei here, yes, we had a nice positive reaction here, and we had a nice rebound from this 50-day EMA. Look, I talked about this scenario here. I said to you that if we do fall below the 50-day EMA, then yes, I'll aim for this upside line, which could also provide good support, and we could then maybe rebound from this one. But hey, the moment it's only part of the idea which is working out. So for now, what I'm going to do here is I'm just going to observe the price action, to be honest, because I really don't like how it's shaping up here. It's not really my ideal scenario. I mean, I can try to find some sort of logic here somewhere, maybe. Oh, I don't like this color. There we go. So maybe we could find something, around these lines here. Yeah, maybe, this could work, or maybe this is a broadening triangle pattern forming, something like that. Look, a lot of things, a lot of options. The only thing is that I think we need to kind of lower down our appetite. If, let's say, something is not working, let's say, as perfectly as you would like it to be, like it to work, just leave it, honestly. And this point, for example, look, I had my move. Initially I was talking about this 32,923. Okay, great. I got my move here towards this 32,310. Tested, then tested the 50-day EMA, came close to it, and then I was saying that if we do fall below the 50-day, then yes, I'll aim for this upside line. Well, we didn't. So instead, we are now rebounding here. Yeah, let me just put it back like this. So we are rebounding back up, and in a way, yes, it could go higher again or something like that. But I think that we need to wait this one out a little bit because, look, I can try to start drawing a bunch of lines here. Maybe actually this territory here, this 33,000 zone could be the one to watch in the short run if you would like to consider some higher levels. So basically at this point I will leave it here if it continues to trade around somewhere around this area, but maybe it could bounce around up and down. But if it starts pushing back above the 33,000 territory, then yes, I will consider a larger move here to the upside towards this downside line or the upper side of the falling, broadening triangle, something like that. Or actually, it's more like a wedge. To be honest, I think in general, it's neither. It's just something that I'm trying to see here, and it's this is one of those moments where you need to kind of stop yourself and try to just kind of take a simplistic approach. And if it's not, let's say it's not working, just kind of leave it. So that's why my simplistic approach here will be this: that from the 33,000 mark, that's from where I'm going to consider slightly higher levels. For the downside, I would like to see a break of this upside line here, and then yes, from there I will go a little bit lower, at least towards the 100-day EMA. ASX 200, now we're seeing a nice recovery here, and not only that we saw like the positive reaction from the Fed officials that we had yesterday, and that maybe no rate hikes are going to come in play. But NAB, National Australian Bank survey came out. Let me just read out to you that one. This morning it came out. So the business confidence for June improved. Well, improved. It was at -3 previous. It was adjusted, by the way. The expectation was for a -1. It came out at 0. So it's like neither this, neither that. But the market took it as a positive. I think that they took it more that the NAV business survey came out higher. So the forecast was for an 8. The previous number was at 8. The forecast was for an 8. It came out at 9. So higher basically than the previous one. So that's good. Let me just actually check the tendency. I mean, or the trend. Okay, look, it's better, yes, than the previous for sure. However, it's not better than, let's say, the April number. The June came out at 9, and the May number was at 8. The April number was at 14. March was 16. February was 17. January was 18. So basically, it's like, you're kind of, let's say, I don't know, you're trying to see some positive, you're over positive person, like you're trying to see, if everything's bad, you're still trying to see some like a light in the end of the tunnel, although actually it's all bad, so it's kind of like similar to that. I mean, some might say, hey man, that's a good thing, right? Okay, that for some it's a good thing, for some it's a bad thing. So we're all different. So anyway, long story short, we're getting that nice positive reaction. That's great. I talked about the 7,000 territory. I said to you that if we do climb back above it, then yes, I'll aim higher. I'll aim for that 7,064 zone right here, which we managed to reach perfectly. And then I'll aim for that 7,121.25 level. So as you can see, we are climbing nicely to the upside. So at this point, I am still leaning towards the upside a little bit. But at this point, given that we already reached my target, I am kind of getting cautious around here. So I want to see where we're going to close today in relation, or sorry, not close, but how we're going to end up, trading today, let's say, in relation to this, because this is the futures, by the way. So at this point, long story short, I'm cautiously bullish. However, I would like to see a stronger move above this 7,064 territory in order to go further north. S&P 500. So as I said yesterday, the Fed officials came out. Like the dollar, by the way, the dollar weakened. I mean, that was also on the same kind of speculation that, okay, that, at the moment we'll see some more hikes, but actually later on it's going to go, we're not going to see any more hikes, and that's why the dollar kind of declined on these fears. And okay, I would say we'll see how that plays out. Of course, I'll jump into the US dollar in a bit. But and looking at the indices here, the S&P 500, so yeah, we did rebound a little bit here from this territory, or should I say close enough, this 4,400 zone. I spoke about that area, and look, if you want to go, let's say lower again, this 4,400 zone is something to keep an eye on. And yeah, if we do fall below the oh, don't like this one. Don't like this one. Don't like this one. I like this one. 4,411, something like that. And yes, this is from where I will start considering maybe lower levels again, but only in the near term. Because again, don't get me wrong, we are currently stuck in a range. With the upside, as I said before, I'm taking a very conservative approach, and I'll wait for a push above the 4,498 territory right here somewhere in order to go higher. The Dow Jones Industrial Average. Look, the picture here is interesting as well. This one's a little bit more exciting because, again, it's doing something that I kind of wanted it to do. So yesterday I spoke about this whole highlighted zone. I said to keep your eyes on it because if it provides good support, we might see a rebound. Well, there we go. And actually, we almost reached my target here, the 34,232. So I'll take it as a success in a way. But if we clear that one further, yes, we could go further towards this downside line taken from the high of the 16th of June. So in other words, for now, I am leaning towards the upside in the short run, but only if we do clear this 34,232 territory. If we clear that, then yes, I'll go for this downside line. And if that downside line gets cleared, well, guess what? The whole idea of a descending triangle pattern can be scrapped. And, and once again, the descending triangle, which according to all the TA rules has to be a bearish indication, will work the opposite way. So, if we've seen that happening, and we've seen that happening with the euro dollar, so yep. I'm not saying that it's going to be the case all the time. No, still the rules are rules, but again, it seems like that the rules will have to be changed later on, but we'll see. But yeah, look, that's the simple approach to Dow at the moment. Like I said, by the way, I'm picking up on most of the same instruments that I picked up yesterday. The reason is that because we had some movement, maybe we could see something else in here, or we could maybe position ourselves a little bit differently. But in this point, yes, the Dow here is working out nicely. We are rebounding nicely. So in other words, we're confirming so far this descending triangle pattern. But again, let's see how we're going to play out near this downside line, which is the upper side of the descending triangle. If we break it, okay, good, I'll go further north. But at this point, looking and just analyzing the chart in just here from the very, 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 very short-term perspective, if we do pop above the 34,232 territory, then yes, I'll get a little bit more excited with some higher levels. Nasdaq. Also, not much to talk about here. That we did get a rebound, so that's fine. But I'm still watching the same territories for my breakouts. So this upside line is needed. I need to see a violation of it in order to go lower. And for the upside, I need to see a push above somewhere above this 15,475 territory. Or maybe if you want to round it up 500, that's good as well. But yeah, that's the one that I'm going to be keeping an eye on. So if we do pop above it, then yes, this will confirm a forthcoming higher high and potentially could attract more buyers into the game. Something that I forgot to do, as always, good morning, everyone. I hope everybody's having a wonderful start of Tuesday, guys. Today's day, in terms of economic data, not maybe the most exciting, I would say, but hey, there's still something that we can, try to squeeze out. DAX, the German index. Look at this. This is wonderful. Look, I talked about this last week, and in my Friday's video, I said to you, hey, we have ourselves a possible rising wedge pattern, and as long as we remain inside it, there is potential to go back up. And another thing that I said to you that, look, this candle here looks like a pole. And this correction to the upside looks like maybe a bearish flag formation. But again, even if it is a bearish flag formation, I said to you that I need to see a drop below this 15,635 area in order to go lower. So at this point, I am just, yes, sticking to my idea still. What I said to you also on Friday, that don't be surprised, for example, if we do start, correcting back up or grinding higher, like alongside this lower side of this rising wedge on the bigger picture. And also something that I threw out here, one of these analyses that I threw out here on Friday. So yeah, look, at this point, I am very, very careful. The fact that we have climbed and stayed and we're continuing to trade above this 15,834 territory, that's something that I am really keeping a close eye on. If we do continue to trade above that, then yes, my next target is the 50-day EMA, or maybe even this downside resistance line taken from the high of the 16th of June. So yeah, let's keep an eye on that one. In terms of the, let's say, downside, well, yeah, actually, I already mentioned that. And actually, if we do fall below this hurdle, I mean, this would be wonderful, because this would be like a textbook scenario where a rising wedge breaks out to the downside. In general, I stick to like these rising wedges. I do like them more because they do the TA rule, kind of they do it by the textbook a little bit more than the other patterns, but still that we have an element of the doubt all the time. But at this point, I am cautiously bullish, but only up until maybe this 50-day EMA. I know I do have this downside arrow. Oh, sorry, upside arrow towards this downside line. That's my ideal scenario, but let me say that I'm aiming only for the 50, and then I'll see if we do clear it. Okay, great. I'll go higher. But if we don't, then maybe we could consider something like this. So the dollar index, there we go. Boom, mission accomplished. Congratulations, everybody who captured this drop. I talked about this yesterday. I said to you that in order for me to go higher, I need to see not only a push above this 102.41 zone, but also above these EMAs. Well, we didn't get that. Instead, we got my other scenario, where I said that if we do fall below the 101.95 territory, I'll go lower. And there we go. It seems like we formed something of a bearish flag, I think, maybe on a 4-hour. Yep, something like that. Not ideal, of course, but nevertheless. And then we reached my target, 101.49. That's what I was aiming for. Now the next question is, can we go further south? And first off, actually another question is, can we stay below this 101.49 zone? If we continue to trade below it, yes, I will go further south. My next target here is this one, the 158 zone, and then the lowest point of April near the 100.42. Now, of course, everybody is watching that psychological 100 territory. That's what everybody likes. Everybody likes those nice, beautiful numbers. But yeah, and well, actually, me too. I do also like those beautiful numbers. And at this point, look, everything's kind of leaning towards that idea. But I have to warn you that there are obstacles in the way lower. So, for example, like these two, like the lowest point of May and the lowest point of April. So check out those. And that's what I'm going to aim for now. And yep, as long as we continue to trade below this territory, below this 101.49, if by any chance we reverse back up and start climbing higher again, what I'm going to do here is I'm going to keep an eye on this 101.95, 96 zone. The one that I looked at previously as support, now I'll look at it as resistance. And if we clear that one, this may potentially open the door to some higher levels. Then we'll have to, of course, consider this one, the 102.24. or maybe, you know, this one, the 102.41, and then, you know, we'll go from there. So we'll go in slow like increments. But at this point, yes, I'm leaning a little bit more towards the downside. Gold is enjoying the moment, of course. You know, weaker dollar, great. And another thing, we are near my key resistance barrier again. So the 1933 zone. I'm not kind of talking about the level itself, but 1933.35. This is something that I'm keeping an eye on. But of course, my logical me and my cautious me says to me that, hey, Darius, wait for a break of this downside line and then go do something about it, you know, or then maybe, you know, like also wait for that 50 and the 100-day EMA break as well. Yes, all that is correct. However, let's slowly start examining higher levels. If we do start climbing already above this, well, actually, some of you might say, hey, why not to start looking at this little hurdle here, the 1931? And I would say, yes, you can. Just the only thing is that have your stop loss in place. Risk only what you can afford to lose. Because again, this here, let's say we do climb a little bit higher, but let's say we find good resistance somewhere here, and then we sell off again. And what's stopping it from doing that? Well, nothing. So if, let's say somehow the dollar gets, you know, strengthens, and that could, you know, have its effect on the on gold here. So just kind of keep that in mind, guys. So at this point, long story short, I am leaning a little bit more towards the upside, but I will slowly start examining higher levels. If we do push above the 1931 level, then the 1933, 1935, and then so on, and then we'll see what we can do with this downside resistance line. Silver, there we go. This one's a little bit more positive and a little bit more reassuring, I would say. And we are now clearing this downside line, the one that I talked about, and we're approaching these two, the 50 and the 100-day EMAs. And this is from where my upside scenario begins. However, I think that it's wise enough to say that in terms of levels, you can keep an eye on this 23.31 zone, approximately around here. If we do clear that, then yes, this will confirm. Well, actually, no, it's not going to be a forthcoming higher high. I think a forthcoming higher high will be from yesterday's high, 23.31 zone. Well, actually, yes, approximately around there. So if we do clear that one, then yes, forthcoming higher high will be confirmed. Then, of course, we'll aim for these 50 and the 100, and if that gets cleared, well, there we go. Congratulations to the bulls. We could see some, you know, some nice bullish action. Now, this is where I think I need to lower down my appetite as well. Again, although I do really like these two levels, the 24.21, 53, but I have to accept the fact that it might be a good holdup somewhere around here. There might be a good holdup. So near the 23.83, 84 zone, approximately around here. And you know what? And I think that would be that would make sense, just to go slowly, not to rush into anything. You know, we can always target these, but at a later stage. But at this point, let's go just for this one, and then we'll take it from there. If by any chance the commodity reverses back down here and falls back below the 200-day EMA, well, guess what? This kind of increases the chances for a further decline, but probably more bears could join in on a break of this this upside line. Drawn from the low of the 23rd of June, and then yes, we could consider, you know, further move south here. Platinum, something that I picked up last week. Just wanted to quickly update you on this one, and I talked about this this idea, and I said to you that, look, if we do break this downside line, I get it, in general we're on decline. But I said to you, from the shorter term perspective, if we do break this downside line, then it increases, and we pop up with the 925 territory, it increases the chances for this precious metal to, you know, go a little bit higher, maybe back to the 50-day EMA. So this is what I'm going to do for now. The fact that we popped above the 925 territory, that's great. This increases, like I said, the chances for further up move. I will keep an eye on this 939 zone as well, because if that gets cleared, then even more buyers could join in, and then my scenario for aiming for this 50-day EMA could become even more realistic. So that's the game plan that I'm going to stick to for now. Around here, we have this little hurdle, this low, the low of the 15th of June, which in a way, probably by the time, let's say, this could travel higher, the 50-day EMA could also coincide here nicely, and just it would be like a picture-perfect target. For the downside, guys, I think that the better option is to wait for a break of this upside line, and not only to wait for a drop back below the downside line, but actually also wait for a break of this upside line, and then consider some lower moves here. Oil. So yeah, there we go. Oil. Of course, all the talks about the cuts, about, from Saudi Arabia and Russia, then, those that they're saying that, Saudi Arabia will cut by 1 billion barrels per 1 million barrels per day. Let me just confirm that information. Just bear with me one moment. 1 million barrels per day. Yep, cut in to August, and up to August. Yep, and then Russia will cut by 500,000 barrels per day from next month. So okay, we'll see. We could see some more upside on this one, and to be honest, the technical picture is shaping up according to all those news. Look, we're trading above this upside line. I talked about this, and we're now sitting still above the 100-day EMA, so that's another positive thing. And yeah, if we do continue to trade above the 100-day EMA and this upside line, then yes, I will target some higher levels, like for example the 74.73 zone, or maybe my ideal target is the 200-day EMA. That's what I would like to see here, a test off, and that's roughly around that 76.28 zone, something around like that. Will that happen? Again, we'll just have to wait and see. But at this point, if we need to take some sort of a side here, I'm taking the bullish side a little bit, but only if my criteria continues to be met. Yes. If we do break the upside line here, then yes, I will consider some lower levels. A drop below the 50-day EMA may even attract more sellers into the game, guys. So yeah, and then we could start, considering some lower levels. This downside line, I need to get rid of it. No longer needed. And instead of that, my favorite formation is range, and there we go. We are approaching the upper side in a way of that range. So let's see if it's gonna, if it's gonna hold or not. And then yeah, we'll go. If we clear it, then great. We could go for more buying activity, and we could go for that 200-day EMA. Bitcoin Cash. There we go. So the Fibonacci's have to go. No longer needed. They did their job. Now it's time, just out of curiosity, actually, was it here somewhere? I don't know, actually. You know what? It didn't. I can try to see something here wherever I want, but no, that's it. It did its job from here to there. Now the question is, what's going to happen next? Well, a professional trader eye can see something like a possible bullish flag here forming. So we have our nice pull and we have our little correction. And another thing here, this 268 zone somehow. Okay, I have to say that on one hand, it was doing a good job and kind of still does, but I think it's time to redraw this and just approach it from a different perspective. So I think that a new level has to be taken into consideration. So in other words, if you're looking for some lower levels, 257 territories is something to keep an eye on. A drop below that may lead to a test of the. Sorry, excuse me, guys. Something caught into my nose, and it's really annoying me. But yeah, looking at the 257 territory, that could open the door to some lower levels, but still we would need to keep an eye on this, the current lowest point of July. near the 248.50. If that gets cleared, well, guess what? A new low can be established, and we could go further south. So at this point, although I really like the idea of a bullish flag here, or maybe some people like me who are obsessed with these wedges and everything, so maybe they will see a rising veg, or sorry, a falling veg, which could be a bullish indication, and we could see some more upside later on. But yeah, at this point, I'm waiting. If let's put it this way, in order for me to go higher on this one, I need to see a break of this downside line taken from the high of the 30th of June, and then I'll get comfortable with some higher levels. For the downside, again, as I said already, these are my two targets. Litecoin, beautiful, beautiful, guys. This is what I talked about yesterday. I said to you, keep your eyes on these crossroads, because if this is gonna hold, we might see a rebound. And there we go. We got that rebound. We pushed higher. Now I'm cautiously bullish. However, a push above this downside line, taken from the high of the, or should I say the highest point of February of this year, or should I say, yeah, no, actually that's what I'm going to say, the highest point of February. I wanted to say something else, but then I saw that it was wrong. But yeah, if we do clear this downside line, then yes, potentially more buyers could join in, and we could maybe go back up here. Now, of course, there is that element of the doubt, because the moment we're having that nice rebound, we're pushing back up, but who's saying that we're not going to get a hold up somewhere here? So in a way, logically speaking, I think that the good option would be to get a hold up, wait for a hold up somewhere around here, and then decide after. If we do clear it, great, I'll go further north. If we don't, then maybe a bit of a decline back down here could be possible. Okay, now let's jump into some pairs, guys. Bear with me one moment. So, sorry, had to water my throat a little bit. Nothing better than a good tea. Anyway, AUDUSD. So there we go. Beautiful retracement back to the upside. And look, this is something that I have to admit. That this didn't really work very nice. So this 0.6640, I talked about this. I said to you that if we do drop and stay below it, then yes, I'll go lower. Then yes, I will considering maybe a move back towards the 0.6595 territory. And in a way, we did move lower, but we failed to stay below it, and then you can see this is what happened. And to be honest, this looks like a bullish indication. However, I will stick to my game plan. I'm not really gonna rush into anything. I will go higher if we do clear this territory right here. If we do clear the 100-day EMA, which I don't know if you can see or not, but it's shown as the green line here. It's inside this upper side of the range that I've kind of marked. And if we do pop above it and stay above it, then yes, I will go. My next target will be the 200-day EMA. Actually, this arrow has to be a little bit more on the modest side. I think I've overextended here a little bit. And I think that, yes, can we recycle something? No, I think I need all of them. So this is what I'm going to aim for, the 0.68 territory. And then, yes, I will go from there. I think that this way, I think would be better to draw. So the 0.68 territory, yes, something to keep an eye on. And but again, before we could go further, or should say before we could examine higher levels, I need to see that push above the not only the 100-day EMA, but also the 50-day EMA, where, as you can see right now, the pair is struggling to overcome, or should I say not to overcome, to stay above it. So if we do stay above this, then yes, I'll go higher. So this is looking quite bullish, but again, confirmation break is needed. AUDJPY. So this one's looking quite nice here. As you can see, AUDUSD, we're examining that one to the upside. AUDJPY, we're examining to the downside. Just because the indices did kind of decline recently. And look, this is where the conflict is, that as you can see, the indices yesterday bounced, but the yen buying kind of remained remained on the table. So that means that although although with the market, the indices did rebound, still the market I think thinks that not everything is as good as it seems, and that's why traders continue to jump into the yen. So meaning that, hey, maybe the indices will actually, they might rebound a little bit more. Maybe today, by the way, today they might kind of push a little bit back to the upside, and tomorrow when we're gonna get the PI numbers from the US. Now that's when the indices might drift back down, and this is where we could see like some more yen buying or something like that. So just kind of keep that in mind, keep that such a scenario in your heads. And at this point, look, AUDJPY, I'm not excluding the fact that it might just bounce around here near this 50-day EMA, and then yeah, we and then we'll see what happens further. Content head 99443. Good morning to you too. Can you tell me, will GU mean GBPUSD? I'll get to GBPUSD in a bit. This one is on my list here. So you can see here on the bottom. So this is normally the list that I go through. So you can always see which instruments I already kind of spoke about and the which ones are upcoming. So just kind of I'm keeping this one on the chart so for your convenience. But yeah, I'll pick up with GBPUSD in a bit. But yeah, coming back to this, so at this point, look, we might see this one oscillating maybe today around this 50-day EMA, and then tomorrow, that's when we could see more action on this pair. But just of course, as always, guys, be careful, have your stop losses in place, and we'll see how that's gonna play out. AUDNZD. So this one's beautiful. And look, I talked about this and yesterday. I said to you that if we do fall below this 1.0729 territory right here, then yes, more sellers could join in. In general, I said to you that I'm cautiously bearish because we are still below this downside line, and indeed we did move lower, but we kind of came very close to this 1.0729, and then we kind of failed to move further south, and then we rebounded back up, and today this is what we're seeing. So what I'm gonna do next, first of all, this level has to go. And then next thing is that in order for me to go higher, I would like to see not only a break of this downside line, but also a push above the 1.07 or actually 1.08 territory to be a little bit more precise. If we do climb above it, my next target is actually the 100, the 50, the 200-day EMAs. This is something that I'm going to aim for. If that gets cleared, great, I'll go further north. Simple as that. NZDUSD. Well, talk about a roller coaster ride, and yesterday we saw a decline. Then we had a rebound, and there we go. Beautiful. Everything's just beautiful here, I would say. And we are stuck. And guess why? We're stuck because we have the RBNZ tomorrow morning with its interest rate decision. So that means that we might see this one just kind of sticking around here somewhere, just trading near the 200-day EMA, bouncing around. But then just be cautious, be careful, because again, if we see some nice action, nice bullish action here, then yes, we could see a nice pop. Look, in general, at the moment, the expectation is for no rate hikes. So the previous number is at 5.5. The forecast is also at 5.5. And the question is what they're going to do. Will they hike or will they actually keep it? And to be honest, and this one is really like a lottery because it's kind of following the footsteps of the RBA as well. So there's Australian Central Bank. And that one, like last time, the expectation was for a rate hike. It came out keeping the previous rate. So yeah, that one just kind of jumps around as well. And the fellow neighbors here, New Zealand, might do the same. But again, let's wait and see. Let's not try to guess too much. at this point, I would say I am just observing the price action here, and if we do pop and stay above this 0.6220 territory, then yes, I will go higher here towards the 0.6248 zone right here, which is marked by the high of the, or should I say the highest point of June, and then we will go from there. Maybe we'll aim for this downside line, who knows. So yep, that's the kind of game plan on this one. For the downside, now, like previously, I talked about this 0.6132 territory, but I think I will actually start looking at some lower levels from this, from a drop below 50-day EMA. As you can see here, it provided fantastic support yesterday, so it shows that it is a good area to watch, good line to watch, and if we clear that line, then yes, potentially more sellers here could join in. USDJPY, there we go, another beautiful move here. Yesterday I talked about this one. I said to you that as long as we stay below the 143 territory, I'm leaning towards the I'm going to keep an eye on the 142. If 142 gets cleared, I'm aiming for the 141 and also this 50-day EMA. So honestly, I really love this. This worked out perfectly so far, so good. And in general, I think that we could go further south, and I think that we could still aim for this zone, or I mean for the 100-day EMA. In general, we can do that, but at this point I think the best option is to wait a little bit, give it some time. Also, today, for example, like I said, I don't get surprised if this continues to, let's say, oscillate around the 50-day EMA right here. But then maybe going into tomorrow, that's when the beauty could come out. So just keep that in mind. Maybe it'll give a boost to the dollar. Maybe the US dollar, might reverse back up here tomorrow during the CPI numbers, US CPI numbers. So I would strongly recommend to keep it simple and don't risk too much, because again, I get it, volatility can sometimes present good opportunities, but at the same time it can steal from you as well, or take from you. Not steal, but just take, because it's not really stealing when you're actually seeing it and intentionally going into the market for it to steal, for it to take from you. But yeah, at this point I would say just let's leave it. I'm gonna leave it at this point, because again, my targets got reached. I'm happy about all this. So now what's next? I want to see how it's going to play out today in relation to this 50-day EMA. If we're going to somehow stay above this, maybe tomorrow we could get a nice drift back down. Who knows? Like I said, a lot will depend. It's very difficult to speculate on things like that when you have important economic data coming out. USDCHF. So just a quick update on this one as well. So mission accomplished. Boom. Great. I'm happy about this one. And the same story. I'm just going to observe this one for now. So now I'm kind of cautious here, and I want to see. Look, my range idea worked out, and I said to you that if we do break through one of them sides, if we do fall below the 0.8907, then yes, my next target is the 0.8820. That's it. Mission accomplished. Great. Wonderful. I am happy with this one. Now what's next? Well, now I'm redrawing my range, making it a bigger one, because I said to you last week that it seems to be like a range with a smaller range within the bigger range. So that's why I am gonna keep an eye on this for now. And yeah, if we do fall below the 0.8820 territory, then yes, this will confirm a forthcoming lower low and potentially could attract more sellers into the game here. And then maybe we could, aim for this little hurdle here, which is the lowest point of January of 2021, or in other words, the lowest point of 2021, guys. So this is something that I'm keeping a close eye on. And look how far we have traveled here. So, yep, the US dollar is has really weakened against its Swiss counterpart. USDCAD. So this one's a little bit different, but also at the same time exciting. And there we go. We broke the upside line. We fell below the 1.3270. I talked about this hurdle. Great. I'm leaning towards the downside. Simple as that. But as you can see, the arrow is drawn here all the way towards the lowest point of June. But I think that it's better to initially aim for the 1.32 zone first. I mean, we're aiming for that one first, and then we'll take it from there. We'll see what he wants to do after. If that gets cleared, okay, we'll go further south. But at this point, yes, I'm leaning towards the downside as long as we stay below the 1.3270 territory right here. And I'm aiming for this 1.32 only. For the upside, I would like to see a push back above the 50-day EMA right here, because at the same time we might get a boost back above the this upside line, and then we will go from there. GBPJPY, so this one dropped nicely, so everything's according to the plan. I talked about this plan yesterday, if you remember, and I talked about this idea, and I said to you that if we do fall below the lower side of this this little range here that we had, and then yes, I'm going to aim lower. I'm going to aim for this upside line. I'm still aiming for that as long as we stay below the lower side of this range. If we do that, I'm aiming for this upside line drawn from the low the 24th of March. If we do climb back up, back inside the range here, back above the lower side of this range, then yes, I will consider a move higher. I will aim for this 183.77 territory. And then, yes, if that gets cleared, a forthcoming higher high will be confirmed. That will be quite interesting then for the bulls. GBPUSD. So, content head 99443. So you asked if it retraced back to 27.5. Of course, anything can happen. Look, at this point, what I said to you before, that if we do pop above this 1.2848 or in general the 50 zone, I'm leaning towards the upside because a forthcoming higher high is confirmed already. Has been confirmed. So I'm aiming, in general, I'm aiming for that psychological 130 zone. That's my target. This is really what I would like to see. We do have some important areas here around the 1.2982 zone, something like that. But in general, yes, the psychological 1.30 is on the radar. And to be honest, it's quite a logical target at the moment. Looking at the history here, you can see that it previously acted as a good area of support. And when we broke it back in April, at the end of April 2022, we then drifted lower. We found support here near the 1.03, 64, 65 zone. I mean, that was just wow. And then, yes, we recovered, and we're now pushing back towards that 1.30 zone. I will consider the 1.2750 zone only if we do fall back below this hurdle and stay below the 1.2848. For now, I'm not really considering that. So if we do somehow fall back below this, then yes, I will consider maybe a retracement back to this territory. But at this point, everything is kind of pointing to the upside. Look, what you need here is a good, strong reaction in the US dollar. Let's say, for example, the scenario could go that data comes out favorable to the US dollar on tomorrow, and it comes out, that it gives a boost to the US dollar. We see a strong, let's say, spike to the downside. We see a sharp fall to the downside here. We could see maybe a drift lower. Then it might be a moment game here. So we could see like a sharp move, and then kind of, we could see maybe a reversal back to the upside. So once everybody starts adjusting, we'll say, hey, you know what? But still, there's the Fed and blah blah blah. No rate hikes maybe later on, and blah blah blah. And that's why the US dollar could remain under selling pressure. And like I said, it could be a momentum thing that we could see a sharp fall to the downside, but the question is, will it go all the way towards the 1.2760 territory, the one that I have here? I'm not sure, honestly. If I would have a crystal ball, I wouldn't be sitting here. But I'm trying to kind of see logical moves here, or trying to find some sort of logic based on the previous historic action, and how it how it played out in the past, and actually we do see patterns. So at this point, long story short, I would say this way: if we do, let's say, drop and stay below the 1.2848 zone, I'm gonna consider a bit of a retracement back down. But if we, as long as we stay above the 1.2848 zone, I'm leaning towards that 1.30 zone, and I'm gonna keep to this scenario. Another thing about the or let's say about the sharp fall that I was talking about earlier. Look, it could happen, but will it actually go all the way here? No, it might just stall somewhere maybe here near the 1.2781 zone. And let's say if you need a position, you need the rate to go back to that area in order to kind of break even. I would suggest, I don't know, maybe again you'll be the judge, but sometimes it's better to just take a smaller hit rather than a bigger one. And believe me, been there, done that. So it's painful, but it actually works out in a better way in the longer term for me. I've realized that for sure. That the typical scenario, you think, okay, you know what? Okay, I'll take that little hit, and then actually the rate, the price, whatever, falls exactly where you need it, and you're thinking, I should have kept it, and this is the problem, that your enemy is you and all your should have, could have, would have, so just take a hit, if you think that, okay, it's not ideal, but rather reposition yourself and try to recover that, with your with a fresh approach. EURJPY. Looking at the picture here, yes, everything so far so good. Drifting nicely to the downside. I said to you that if we do fall below the 23.6, my next target is the 38.2. Okay, we're on the way there. Yep, I'm just gonna stick to that. I'm not gonna say anything else here. I'm just sticking to that game plan. I will redraw this upside line, and I'll make it as a downside one. And if we do stay below that 23.6, then yes, I am aiming for that 38.2, and then maybe even ideally for the 50% retracement here on the Fibonacci, which coincides beautifully with my 50-day EMA. And finally, EURUSD. So we're hitting that psychological 110 zone, or should I say we're pushing through that. And there we go. We are climbing nicely. Yesterday we did have a retracement initially. That was fine. And then look at this beautiful thing in reverse. So basically almost, I would say almost picture perfect idea here worked out. I said to you that I'm aiming for this 1.1012. Great. Mission accomplished. It reached today already. So what's next? Well, next is the monitoring of this barrier. So this is the barrier that I'm going to keep an eye on, the 1.1012. If we do stay above it, then yes, I'll go further north. In terms of the downside, if we do start falling back below this hurdle here, this 1.0977, then I'll consider a larger correction to the downside towards this upside line drawn from the low of the 31st of May. And then we'll see what we can do after. But at this point, look, I'm saying this way that if you've missed this rally, I would say be careful, be cautious. I mean, again, we could see maybe a retracement back down or something like that. So just kind of stay careful. If you're not really comfortable with this idea right now, just honestly leave it. Wait for it to make some sort of a move. Maybe it will continue rallying. Look, at the moment, I'm considering, excuse me, further upside. Maybe, yes, it will continue rallying towards this 1.1095 or something like that. But if it somehow falls back, back below this area, then yes, great, more sellers could join in. But also, if it continues to rally, what I'm going to do here, I'm going to wait maybe for an opportunity to short it, at least for a little bit. Maybe I'll draw myself a Fibonacci again, and I'll aim for that 23.6 again, or maybe 38.2. Who knows? We'll see. But at this point, I'm just observing the price action. Content head, I can see. Yeah, you're welcome. I don't know. I hope it helped. Looking at the picture here, like I said, I'll try to maybe wait for a correction at some point. Maybe I'll try to capture that one. But at this point, I like when it's breaking, but when, let's say, it traveled it had a decent up move here, and then started breaking a key resistance barrier. That's something that I really don't like. I mean, I previously liked this, which I've mentioned already last week. I said to you that if we break this downside line, I'll go higher, and this is what I like. This was very good. This was fantastic. So yeah, you need to kind of wait maybe for such opportunities. But at this point, yes, it could be a great opportunity, but it seems like we could be chasing the market. So that's why I'm just gonna leave it for now here and just see what he wants to do, and maybe I'll leave it up all the way up until tomorrow, and then see what we can do about it. Anyway, guys, I'll have to wrap it up here. Thank you very much for watching and listening, and thank you very much for your comments, for your rocket ships in there. Yes, thank you for that. It really helps a lot in me. And look, if you found it useful, I'm really happy. Please join me tomorrow morning, as always, 6 o'clock GMT time. I'm gonna pick up on probably most of these same instruments because they're quite interesting. It seems like every day something interesting is happening. You have sometimes these weeks where nothing is interesting happening with the same interest. So that's why you need to kind of search for another maybe instruments, another pair, commodity, or index, to analyze. But for now, it seems like there's some sort of an interesting sequel that's happening here with each one of them, and it's quite fascinating to watch and what's happening on a daily basis with it. So that's why I'm going to stick to most of these, and I'll go from there, guys. So thank you very much. I will see you tomorrow. Stay safe, have your stop losses in place, risk only what you can afford to lose, and everything will be fine. Thank you very much, and bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.